Good morning and welcome to NYSC TV Live. I'm Kristen Scholler. Well, as investors prepare for the all-important jobs report tomorrow, key earnings from mega cap technology companies Meta and Microsoft last night are stealing the spotlight pre-market. Meta, the parent company of Facebook, missed expectations for user growth and warned that its spending will rise next year. Microsoft, for its part, shared disappointing sales guidance. Well, both reports underwhelmed the street after Alphabet's better-than-expected quarter. That report was out on Tuesday. Now, of course, the attention turns to Apple and Amazon, both set to report after the close tonight. And as October comes to an end today, we've seen stocks, by and large, hold up pretty well, considering that this month historically is a more volatile one. In fact, earlier this month, the bull market officially turned 2 after bottoming in October of 2022. And as we await the opening bell, let's take a look at what is on tap in today's show. Well, with the S&P 500 up nearly 1% this month as of last night, I'll be joined by market experts to talk through what is next and review earnings from some of these most richly valued companies. Plus, the nonprofit Fans for the Cure is going to celebrate the opening bell in an effort to raise awareness about prostate cancer. They'll join us live on the floor, as will the American Cancer Society's Chief Scientific Officer. And with the presidential election just 5 days away, an election official is going to join me in studio with what to expect at your local polling place. Early voting is already underway. Well, to talk more about the biggest companies out there and what is driving stocks, certainly this morning and this week, I want to bring in my first guest. Jason Moser is an analyst and advisor at the Motley Fool, and he joins me now. Jason, good morning.
Hey, Kristen, happy Halloween.
It's great to see you this morning, and I know that you cover some of these biggest technology companies. We can start with Meta and Microsoft. Disappointing reports last night. Jason, what are your takeaways?
Yeah, well, I think what we're seeing, particularly with Meta and Microsoft, probably more Microsoft than Meta, is just sort of this continued headwinds in enterprise spending, right? It's not that big customers aren't spending, and this obviously plays right into Microsoft's wheelhouse here, given the enterprise and commercial software applications. But we're just seeing customers spending a bit more thoughtfully. We've been talking about that narrative here over the last several quarters at the Fool, and it seems like this quarter was a little bit more of the same, but like I mentioned, more so with Microsoft than Meta. And I don't want to quibble there. I think those results were still very encouraging, right? I mean, we saw Azure revenue up 33%. We saw cloud revenue up by 22%, and overall revenue up 16%. So I mean, yes, a little bit light on the expectation side, and the forward guide is a little bit lower than perhaps some were expecting, but still, let's give credit where credit is due. I think Microsoft in particular is operating very well in what continues to be just a difficult environment. Yeah,
what's the takeaway so far, Jason, on artificial intelligence? And I ask that because that is a key part of business for these large technology companies. But we also see some of the semiconductors reacting accordingly, as Supermicro Computer, for instance, is having its own reaction amid earnings.
Yeah, well, certainly AI continues to be the dominant narrative with all of these companies, and I don't think that's set to change anytime soon. I think the company that, to me, continues to really benefit and sort of play this narrative out in the most positive way is really Meta. I mean, they are making tremendous investments, obviously, in AI and data centers. Meta AI now has over 500 million monthly active users. Llama continues to become one of the standards in the industry, and all of that feeds back ultimately into their business model, helping improve their products and services, and ultimately helping their advertising model as well. And as we know, Meta is an advertising company after all.
Now, I want to talk about Apple and Amazon. They're going to report after the close tonight. Obviously, these are two different companies, but still grouped into the mega cap technology space, part of the Magnificent Seven. Seven stocks, certainly during the first 2 years of this bull market, really have fueled some of the gains because they are well capitalized. Any expectations for Apple tonight, Jason?
Well, it does seem like the latest iPhone rollout is sort of slow going at first, and I mean that's to be expected, really. I mean, and these phones just continue to get better and better with every iteration, and there's just not the need necessarily to upgrade. I think probably we'll see a lot of headlines focused on Apple's AI aspirations or questions regarding that, and I don't know that I would read too much into that because as we know with Apple in particular. Apple is never focused on being first, right? I mean, Tim Cook says it all the time. They're not trying to be first, they're just trying to be best. And so I think it's a little slow going in regard to how Apple is incorporating artificial intelligence into their business model. I wouldn't look at that as necessarily a headwind. I think they're just being very thoughtful about how they do this. Clearly, in all important holiday season coming up here, and Apple should benefit from that. They continue to really make a lot of progress in the wearable space. And then I think on the Amazon side, it will be very interesting to see how they're guiding in regard to the top line for this coming holiday season. Because as we've seen with companies far and wide, everybody's focused more on value now, whether it's retail, restaurants, tech, whatever it may be. Value is a buzzword you see in a lot of these conference calls, and so I think it'll be interesting to see where Amazon stands in regard to their guidance for this coming holiday season. And they also just continue to hold such a strong position with AWS. I suspect that'll continue.
Let's talk about October. We are wrapping up what has been a pretty decent month for stocks. I mean, we'll see if these monthly gains can actually stick with us through the end of close today, just because with some of these disappointing results from major tech companies, we do see major indexes taking a breather. Of course, as we always note on the show, and Jason, you know well, we are right near record highs, so nothing by and large to be too concerned about. But I want to hear from you, your takeaways from October, and how you think that sets us up for the rest of the year.
Yeah, well, it's obviously been a very strong year for the market to date, and I think from a valuation perspective, it's certainly on the higher end historically. I mean, I think we're seeing the S&P right now trading in that 29 to 30 times earnings range, which is just historically higher than the average. But that's for good reason. Obviously, we've seen a lot of these big tech companies. I think a lot of those returns have been driven by a handful of companies. But that also looks poised to continue. And so I think there's a wild card there in regard to the election, obviously, which is just within a week now. I don't really try to make predictions on how the market behave regarding who actually wins the election, but I do think at least that will eliminate some uncertainty. And I think that's always ultimately a good thing. It really does feel like a lot of these businesses have been focusing on efficiencies, making sure to shore up their balance sheets, put them in a good capital position. And I think in a period, if we do start to see growth slowing a little bit, that'll still be encouraging. That puts them in a good position to play a little bit more offense when the time comes.
Jason, of course, the election is in focus, and on top of the election, we'll have a Fed decision next week, plus a whole host of more earnings coming in, a lot of industrial companies next week, and retailers as we get closer to that Black Friday season. Any surprises that you think our viewers should know about if things do change course?
I don't think there's anything really noteworthy there. I mean, the big question over the next few months, I think, is just going to be regarding interest rate policy. We saw a very big move recently with that half point cut there. That was a little bit more than I think many of us were expecting. I was kind of figuring maybe they'd be a little bit more methodical about it, just incremental. But I think the going theory is right now we will likely see one more. At least quarter point cut before it's all said and done. Inflation, which has been a big point of focus here over the last a couple of years, does seem to be abating. It seems to be better than it was before. Now, with that said, obviously prices are still very high and consumers are stretched, and that is another theme. I mean, we see across all of these companies, regardless of industry, we're just seeing. The consumer being stretched, and I don't think that's poised to abate anytime soon. But again, we shall see. I think it'll be interesting to see how this interest rate policy, how these decisions play out in the mortgage market, because as it stands right now, I mean, the housing market really has kind of frozen up in a lot of places, and that's understandable. I mean, if you have a 3% mortgage, for example, you have a 3% fixed 30-year mortgage, I mean, it's very difficult to rationalize changing that to something like a 6% mortgage if you want to go out and try to buy a new house. So we're seeing a lot of inventory kind of frozen up right now. I know we're certainly very happy to have one of those 3% fixed rate mortgages, and I don't want to give that up anytime soon. But I do think if we can start to see those interest rate cuts, those basis point cuts come down, if they can start to bring those long-term rates down a little bit more, we see that reflected in the mortgage market, I think that does free up a little capital. It frees up a little spending. Homeowners have a lot of home equity out there, and that's money that is ready to be spent, and I think that behooves companies like your Home Depots and Lowe's of the world. So I would definitely keep an eye on companies like that, for example, because it does seem like they're poised for a little bit of a coiled spring effect when that capital starts to free up.
All right, Jason Moser, great insight. Jason, we appreciate you joining early this morning. Jason's an analyst and advisor at The Motley Fool. Well, stay with me, because up next we will head back out to Las Vegas, where Money 2020 took place this week. It convened some of the brightest minds out there looking to shape the future of financial technology.
Now, obviously, your focus is your 300 PF chains that you have around the world. But talk to me more about this new pagoda concept.
The type of service and food that we serve, which is made from scratch, high quality ingredients, great hospitality, great ambience, that can be used in more use cases, more need states, more occasions, to more people more frequently. So the light bulb moment, if there's one, is, wait a second, we can do a great job for you on a lunch during the week. And, and it can be very fast, it can be very affordable, it can be very, very abundant, and of course, delicious. We just have to adapt the way we do things, steps of service, abundance, price points, to be able to serve you this way.
Now, while you're remaining so agile with this ever-changing landscape in the food and beverage sector, how do you sustain your authenticity?
The brand has to know, what they stand for, right? In our case, is every day is a celebration. We want to elevate every occasion and make it special to people, right? So if it's a day-to-day lunch, we created a concept here in the US that we call Express Lunch in our bistros, which is a lunch in 20 minutes, or lunches on us. It's the same ingredients, same kitchen, same steps of service, just an individual bowl, because that's the occasion there. So understand who the brand is, what the brand stands for, and what the consumer, the customer, in our case, the guests, the way they want to live their lives, and adapt ourselves to serve you this way. I believe that's where we found a lot of success, and we continue to do that moving forward.
How do you think your new pagoda concept will impact the broader food and beverage sector?
We believe we can play in a segment which is fast casual, where it's more a customizable, super fast, abundant experience that's very affordable, that we can put people through the line.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the iconic trading floor at the New York Stock Exchange. Well, the exchange has had a presence all week in Las Vegas covering Money 2020. It included a keynote address from the NYSE president, Lynn Martin, as well as conversations from leaders across the globe in the financial technology sphere. Well, Trinity Chavez is on the ground with more.
As the vice president of IBM and former economic advisor, Gary Cohn offers valuable insights into the critical factors shaping our global economy. In our discussion, we explored the complexities of today's economic landscape, including the effects of geopolitical tensions and the evolving dynamics of inflation and unemployment in the U.S. Gary also highlighted the implications of international turmoil, such as the ongoing war in Ukraine and tensions in the Middle East on oil markets. Back here at home, he also addressed the Federal Reserve's dual mandate of maintaining stable prices, ideally around 2% inflation. Although inflation is trending downwards, it still sits slightly above the target. Here's his take on a crucial issue that's flying under the radar.
But I think the issue that's being missed, and it's getting an awful lot of airtime right now, everyone's talking about the 5-year rate, the 10-year rate, and the 30-year rate. Since the Federal Reserve has started cutting interest rates in the United States, those rates have gone higher. And they've gone pretty dramatically higher. We're up 60 basis points on the 10-year rate. We've gone from about 360 to 420. And I think that is exactly what is going to happen and is going to continue to happen. And the reason I think that, and we all have to think back and remember what normal is. We all forgot what normal in the economy, what interest rates, what economics looks like in this country. The normal interest rate cycle in the United States is a positively shaped curve. We've not had one for the better part of almost 20 years.
Yeah.
After the 2008 financial crisis, the Federal Reserve went into zero interest rates. They started building a big balance sheet. We ended up having zero interest rates, a flat curve. We went into this inflationary period. We had an inverted yield curve because everyone said there's a recession coming. So not only did we have to de-invert the curve, we have to put positive slope in the yield curve. So if we end up with Fed funds, 3.25, I don't want to get too technical here, and we put some positive slope in the curve, that would put 10-year rates around 4.5%, 4.25, 4.5%. The truth is also, if you look back at the history of this country, as far back as you want to do a very long-dated average of U.S. interest rates, 10-year has been 4% or higher.
Yeah.
This idea that we have a 10-year rate below 4% is not what we have, which is probably not what the Fed wants to see. They actually are trying to encourage home ownership. They're trying to stimulate or continue to stimulate certain growth in the economy from the consumer. The consumer tends to borrow not overnight rates. They tend to borrow 5 to 7 years in the automobile, if they buy an automobile. They'd like to borrow 30 years fixed if they get a mortgage. Credit card rates, as we know, are at the substantially higher end of the curve. So I think we're into this period where the Fed will continue to lower rates, but I think the curve is going to steepen, and that's the real trick to what's going on here.
Now, Gary also said that because the Fed has raised rates dramatically over the last 3 years, he thinks that they want to get a less restrictive interest rate policy, which means they will start cutting rates, but very slowly. So he thinks that there's going to be a lot of 25 basis point cuts the rest of the year into next year. But again, it all goes back to the regulatory environment. Here's what he had to say about the potential impact of the upcoming presidential election outcome.
We are in a highly restrictive regulatory environment today. And I think if you look at the two candidates we have running for president of the United States, there are 3 or 4 major differences between the candidates. And that's really it. One of the major differences is their stance on regulation. Obviously, the Harris campaign will continue what Biden-Harris has done, which they will continue to be highly restrictive. They will go out and try and restrict as much as they can, and they will feel it is their job to protect every citizen in this country and make sure that they try and level fields that probably don't even need to be leveled. They will not allow grocery stores that have 2 or 3% margins to merge together because they're afraid their margins might go up to 2.5%. They will look to break up big companies. They will look to make all types of capital acquisitions or capital allocation much more difficult. The Trump administration, if you looked at the prior history of the 4 years, they believed in regulation. I'm not saying they're not regulators. I think the mantra when I was there is we believe in smart regulation. So you will see regulation, but it will be regulation that is very much based on helping the economy grow, helping businesses get more synergies, that they can ultimately deliver to the consumer, so the consumer is better off in the end.
And with his background in economic policy, we also talked about how he foresees the globalization trends of the past evolving as companies aim to be more resilient amid geopolitical shifts.
So anyone that thinks we're not going to be globalized, I disagree with. I vehemently disagree with. I don't think we're putting that genie back in the bottle. We are dependent on many nations. Many nations are dependent on us. We actually export a lot of what's in this room. We are really good exporters of services. And the big services that we export are financial services, consulting, accounting. Those are all financial services. We are a big exporter of those. We dominate the world in exporting of services. yes, we do import a lot of goods. And there's this common balance around the world where countries have figured out where their comparative advantages are and where their competitive advantages are, and they try and leverage off of those things. And I think that has shown that it has grown the size of the US economy. Our GDP continues to grow. The global economy's GDP continues to grow, and that's what we're trying to do.
Now, we're going to be releasing more clips from this discussion over the coming weeks, but for now, I'll send it back to you in studio.
All right, well, stay with me, everyone, because up next, as October comes to a close, I'm going to be joined by the Chief Scientific Officer at the American Cancer Society for more on breast cancer awareness and what men need to know about prostate cancer as nonprofit Fans for the Cure prepares to celebrate the opening bell.
I'm Isabella Bizone with Fixed Income in Focus. Today, I'm pleased to have with me Carol Schleif, Chief Investment Officer at BMO Family Office. So, Carol, providing wealth management services to high net worth clients demands diversity across instruments. How are you and your clients using fixed income products, especially in this higher for longer rates environment?
We've always used a variety of fixed income products in the public and the private markets, from separately managed accounts managed internally or managed with outside managers that we use. We use mutual funds, ETFs. We can do private cap or private structured credit, and as well as a variety of structured notes. So we use it a lot, and one of the advantages we have to the current higher rate environment is that it allows us, if clients need money coming in the near term, it allows them to be able to sit in cash, which is something we haven't been able to do for a very long time. So there's a variety of ways to play it, especially with higher yields across most of the instruments we're using.
Absolutely. So speaking of a high rates environment, we've seen substantial market commentary during the rise of interest rates and inflation that challenges the traditional 60-40 equity to fixed income allocation. So in your role, how do you determine the appropriate allocation strategy, and have you seen any shifts in recent years?
Well, the interesting thing is that there was a lot of calls for the death of the 60-40 portfolio back in 2022 when both stocks and bonds were down so much. But it always starts with the individual client and what they're looking to do. And it can be different even within different generations of the family. Anything they're going to need in the next couple of years should not be in very long-term investments, should be shorter term. And as we were talking about, you have an ability to get paid to do that, which you haven't had for 10 to 15 years. So it's very bespoke per client, but we never.
Welcome back to NYSC TV Live, everyone. I'm Kristen Scholler here in studio. Well, October is Breast Cancer Awareness Month, and throughout the past few weeks, we've heard about the importance of routine screenings. Well, Fans for the Cure, the bell ringer today, is a nonprofit that focuses on prostate cancer. And for more on these important diseases, I want to bring in the American Cancer Society's Chief Scientific Officer, Dr. William DeHutt. Doctor, thank you so much for joining.
Yeah, thanks so much for having me today.
It is the final day of Breast Cancer Awareness Month as October comes to a close. What are the messages that you hope women take away from this month?
Well, I think we've made great strides in breast cancer treatment over the last 20 or 30 years. Breast cancer mortality has fallen by about 44%. So thinking of the thousands and thousands of fewer women have actually died from the disease. So really important to know your own individual risk for breast cancer. We recommend people talking to their doctors certainly at age 40, but some women probably should be screened earlier. And we're a little bit concerned about some populations, particularly women from Asian backgrounds, who are seeing an increased risk in breast cancer under the age of 50.
Interesting. I want you to talk to me more about why these screenings are so important in the process.
So cancer is much easier to treat when we find it earlier on. And we really think that that's the main reason why we've seen so many fewer women actually dying from the disease. The treatment is easier, the outcomes are better, and women are much more likely to live a normal and productive life.
Mm-hmm. Do you think women should start screening for breast cancer at age 40, or would you recommend earlier?
I think what we'd really like to get to is a way where really screening is actually much more personalized or precision-based. We really know if you have a family history, or if you have a history of dense breast, or if you have a inherited mutation such as the BRCA gene, you probably should be screened earlier on. And we really like to really empower women to know their own individual risk. So they should know better when they should start screening. Probably some women should start screening actually in their 20s.
And I do think that some insurance providers, some insurers that is, actually do cover those screenings at a younger age than just 40 years old. I know, Doctor, the American Cancer Society just released a major new report for Breast Cancer Awareness Month. What were some of the findings there?
Yeah, so I think one of the most important findings, we talked about the continued improvement of overall mortality, the fact that there are certainly many fewer women dying from the disease. But again, we're seeing concern in breast cancer, as we've seen in other cancers, of an increased risk for women under the age 50 developing cancer.
Interesting. I want to talk more about that, how younger people are seeing this more often than what we had seen in the past. What's behind that?
Yeah, it's a little complicated. A lot of the cancers that we're seeing an increased risk appear to be related to diet and potentially obesity. And so that's certainly one thing we're thinking about, although we don't actually have the proverbial smoking gun. One thing I think it's really important for women to know is that if they really sense something abnormal, something doesn't feel right, that they really need to be sure to advocate for themselves. And if someone tells them you're too young or it's part of your menstrual cycle and doesn't feel right, make sure you see somebody else, because that's sadly not often the case.
Such good insight there, Doctor. I'm glad that you were able to share that with us. I do want to turn to prostate cancer. Of course, our bell ringer here at the Stock Exchange, Fans for the Cure, as our viewers might see behind me, is set to take the podium. Is screening for this type of cancer important?
I think it really is. I think prostate cancer, if we look back, again, about 30 years ago to now, we've actually decreased cancer mortality from prostate cancer by about 50%. And like breast cancer, we know with prostate cancer, if you find it earlier on, it can be much more easily treated, and often people can have a very normal life. One thing also about when you find it earlier on, there are often a lot of men whose cancer can be really safely watched, and they actually never need to be treated, or we can intervene when we see cancer progressing.
What are some of the misconceptions about prostate cancer and even prostate cancer screening?
So I think the number one misconception about prostate cancer is how one screens. Really, the test that is done is really a simple blood test to tell you your risk of it. If you have symptoms or pain, then yes, a digital rectal exam would be part of the examination. But for most people, and they should talk to their doctors before they have the test, simply a blood test, what's called a prostate-specific antigen, a PSA test, will tell them what their risk is of prostate cancer. So I think that it's much easier to be screened than I think people may think.
Dr. William DeHutt, Chief Scientific Officer at the American Cancer Society. Doctor, thank you so much.
Yeah, thanks so much for having me on today.
All right, well, as we await today's opening bell, Fans for the Cure, I mentioned, and as you see behind me, is going to be the bell ringer. It's a 501c organization focusing on educating men and urging them to get regular prostate cancer checkups. The organization provides information and support for men and their loved ones when they're faced with this disease. The group also organizes community health fairs, screenings, and ongoing education, and can provide patient advocates. Fans for the Cure is now 21 years old.
Hi, I'm Steve Garvey, and I'm a prostate cancer survivor. But every year, 250,000 men are diagnosed with prostate cancer, and sadly, 35,000 or more die as it spreads to bones and vital organs. I'm saved because of early detection.
That's right, Steve. And besides being the #2 cancer killer of men, prostate cancer strikes black men at double the rate of the overall male population. We cannot allow this to continue.
Come on, guys. Stay in the game. For your family's sake, for your friends' sake, and for your sake.
Please, men, go to the doctor and have a discussion about prostate cancer. Early detection leads to the best outcomes. To learn more, go to fansforthecure.org, and thank you.
We are off to the races. The stock market officially open. Fans for the Cure celebrating the opening bell there on the NYSE podium. And of course, members from this nonprofit are going to join our Judy Shaw on the floor for an interview to learn more about its awareness efforts a little bit later. But first, let's turn to the markets because we do see what is just a fractionally lower open. Of course, stocks still near record highs. It's been a very strong run. The bull market now more than 2 years old. But joining me to break down what we need to know is Adam Coons. He's a Chief Investment Officer at Winthrop Capital Management. Adam, it's great to see you this morning. And what is your take on where we stand right now for stocks?
Yeah, thanks for having me. I think, this has been obviously a fantastic year for stocks. And this is 2 years in a row that we've had above double-digit type returns in equities. And in some ways, we're clawing back what we lost in 2022. And so right now, obviously valuations are a little bit on the, kind of topper end, but markets still feel relatively healthy. Earnings still are healthy. And so I think, we're pretty fairly valued right now. Markets just as a whole don't give us a lot of angst. There are external factors that do. And so I think that's what you're going to see kind of in this fourth quarter is those external factors, the black swan so-called events that are kind of circling the markets will be a lot of the focus for investors this next couple months.
Interesting. So the stock market up double digits in the past 12 months. We know that September and October, historically volatile times, but the market gained in September and is looking to try to eke out a gain in October as well. Pretty impressive, Adam. So you mentioned black swans. Give us a little glimpse of what those could be heading into year end.
Yeah, I think that the most obvious is the election coming up. It's another contentious election. And so I think, the results of that ultimately won't matter. But I think in the short term, it could have an effect on markets just from the uncertainty. Markets tend to kind of like what they've known in the past. So if there's increased uncertainty, you're going to see volatility obviously pick up. And then when we look abroad, there's obviously the geopolitical issues that have kind of come and gone in waves, but they haven't gone away. So the issues in the Middle East, the issues in kind of Russia, Ukraine, those continue to be just events that we have to know are out there. They're not things that should affect the way you're investing, but I think they do, as they kind of start to build, as they layer on top of each other, it should give investors this a little bit cautious tone as we head into year end. Obviously, on top of that, we've got the Federal Reserve and the decisions that they're going to make heading into year end. So that's kind of the cherry on top of all of this is the Fed.
Of course, earnings coming in mostly exceeding expectations, of course, for the third quarter. Economic data showing that the economy is still growing. Consumer sentiment, in fact, very strong. Consumer sentiment, we learned earlier this week, up 11% in the latest read, the fastest acceleration since early 2021. We'll get that all-important jobs report tomorrow. All of these data points, Adam, we know will inform the Fed next week when it meets next on its rate decision. What is the path that you anticipate we'll hear from Fed Chair Jerome Powell when it comes to borrowing costs?
Well, yeah, you nailed it. Earnings have been better than expected. Now, the bar was set a little bit lower, but the consumer is the kind of highlight here. They have continued to be resilient, bucking the trend of economists that thought that they were going to be the thing to push the economy to the downside, and it just hasn't happened. And so I think that does have to affect how the Fed takes action or doesn't take action. The markets have gone back and forth about how many rate cuts that have been priced in. And right now they're still pricing in at least 2 more cuts from the Fed. I think that's going to be a hard case to make for the Fed. I do think we'll see at least a 25 basis point cut in the next meeting. But I think after that, it's going to be really difficult unless the economic data rolls over sharply. It's just hard for me to see how the Fed can have a narrative to the market that they should continue to cut interest rates. So I think we'll see one more just to kind of give markets a little bit of ease, and that'll help reduce a little bit of volatility going to year end. But like I said, after that, I think unless we see some dramatic change in the economic data, dramatic change in the way the consumer is behaving, I just don't see why the Fed would cut rates.
Adam, great to get your take. Thank you so much for getting up early with us here on the East Coast. That's Adam Coons, Chief Investment Officer at Winthrop Capital Management. All right, well, as we look to round out October trade, up next, we're going to head to the floor of the stock exchange where Fans for the Cure is going to join our Judy Shaw right after ringing the opening bell.
Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I am live on the floor with my friend Stephen Lee, founding partner and portfolio manager at Logan Capital. Stephen, thanks for stopping by.
Thanks for having us.
So I want to talk about your ETF. It's LCLG, easy to remember. It's the Logan Capital Broad Innovative Growth ETF. Tell us a little bit about the strategy behind this ETF.
Yeah, it's a strategy my team and I have been running since the 1990s. So we've been through a lot of different markets together, and we really focus on doing three things. We spend a lot of time looking at the economy. What are the trends? We expanding, contracting. Whose customers have a higher propensity to buy? We do a lot of quantitative work based on earnings leadership, which has allowed us to find names before everyone's talking about them. And we do technical analysis, which gives us the perspective to be long-term investors and capture gains over the long term.
So I want to talk a little bit about the FANG stocks, Magnificent Seven. Like, we've got these different combinations that are out there, right? When you look at those, how have they affected your portfolio construction, the way you think about risk management?
You know, they've been a great source of opportunity for us because, as I mentioned earlier, we tend to find names a little earlier than our peers, and we have some very good disciplines about risk management and position sizing. So very often we'll find that those stocks have been, as they appreciate and become big parts of the benchmark, we can sell into that strength and then use our earnings leadership work to find the next generation names. So often when the FANG stocks get to be a big part of the benchmark, our risk reduction has us taking profits and planting seeds for the future.
So let's talk about current investments, recent investments. You know, are there certain names in the portfolio? You know, where has performance been coming from for your ETF?
Sure. Well, it's interesting. Obviously, we've had some of those big tech names that everyone knows. As I mentioned, they've gotten to be big parts of the portfolio. So then we've trimmed those, bought next generation leaders. So companies like an Arista Networks. In the consumer, we've been a little more constructive on the consumer than some.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, we saw Fans for the Cure celebrate the opening bell this morning. It's an organization focused on early detection of prostate cancer. And for more, I want to bring in our Judy Shaw, joining us live now from the floor of the Stock Exchange with more. Judy, good morning.
Good morning, Kristen. So joining me now is Ed Randall. He is the founder and Chief Advocacy Officer for Fans for the Cure, along with Dr. Michael Feuerstein. He is the Chief of Urology at New York Presbyterian Westchester. Ed, Doctor, it is great to have you here on the floor after ringing the opening bell. And I want to start off by talking about Fans for the Cure, Ed. Tell me, how did it get started? And tell me about the services that you offer to men and their families.
Well, it began, Judy, out of personal experience. I went to the doctor for a routine annual physical. I was only 47 years old at the time. And I took a PSA blood test. The next day, my doctor called me. John had never called me. And he goes, you know, your PSA is really high. Now, at this point in time, I've been broadcasting for a number of years, and my only definition of PSA was, repeat after me, public service announcement. I have no idea this is an indicia for cancer. He says, you know, maybe the lab screwed up the blood test. Come back, let's take another blood test, send it to another lab, which I did and he did. And the results of the second test were exactly those of the first. Shockingly, I had prostate cancer. I had no symptoms. And when I went through my procedure to relieve me of the prostate cancer, I came to the realization when I went into my two favorite words in English language, in remission, I said, and I said to myself, there is a 99% cure rate of prostate cancers detected early. I was detected with no symptoms. There could be tens, hundreds, thousands of men out there like me walking around feeling fine, thinking they were fine. We got to get to those guys. So having been a baseball guy all my life, getting as I like to say, a second at bat at life, I founded the 501c3, now called Fans for the Cure, dedicated to prostate cancer awareness and education.
And Ed, when did your focus shift to serving underserved communities?
In the last few years, we've decided to do that, Judy, and it's been a very rewarding experience for us to go into, if you will, the healthcare deserts and to bring our message of prostate cancer awareness and education to these men who largely don't know that a simple PSA blood test can save their lives.
And doctor, tell me, when did you get involved with Fans for the Cure in Black communities? When did that begin?
Yeah, about 6 months ago, Ed and Joe Cosgriff invited me to do some public health community outreach work in towns of Yonkers and Mount Vernon, and we've done prostate cancer screening, and we know that men in underserved communities are disproportionately affected by prostate cancer, and as it can be easily detected by a PSA test, it's really important to educate men in these disproportionate communities, and so we've had a lot of success, I think, in educating these communities.
To the doctor's point, Judy, the incidence of prostate cancer in the African American community 2 to 3 times higher than it is in the white community, and their life expectancy a lot less than us.
Now, we know that November is Men's Health Awareness Month. Ed, tell me, what's your message to those men out there who are not going to their doctor's appointments?
Go to the doctor and go, please, go get a simple PSA blood test. It can save your life as it did mine. And that is basically our message. Judy, we want the men to be able to walk their daughters down the aisle on the day of their wedding. We want them to be able to hold their grandchildren. A man is diagnosed with prostate cancer in this country a man dies of prostate cancer in this country once every 15 minutes. 34,000 men are going to pass away during the calendar year of 2024 from prostate cancer. It is our mission to keep families together.
And doctor, it is a simple blood test. Why are men not doing this? It's so important.
I think there's myths or misperceptions about what a prostate cancer screening entails. Many men think it involves a prostate exam. 99% of prostate cancers are detected by a blood test and PSA screening. And this is a simple blood test that your primary care doctor can do, and it doesn't involve any kind of invasive testing. And I think if we get that message out, I think we'll detect a lot more prostate cancers early.
And how are you encouraging men out there to take responsibility for this when there's so many cases where the symptoms are not there?
Yeah, like Ed said, I think to sort of warn men, that detect it early, that this is a curable disease in most cases, that we want men to walk their daughters down the aisle, we want them to hold their grandchildren, and just taking care of themselves, taking that step to go to the doctor can save their lives.
Ed, what's your final message to all the men out there?
Please, we want men to go to the doctors, get a simple PSA blood test to know that they are loved and they are wanted and they are needed and they are cherished and they have a responsibility to go to the doctors for themselves and for their families.
Very important message from you both. Ed, Dr. Feuerstein, thank you so much for joining me and sharing that important message to all the men out there.
Thank you. What an honor for us to be here.
Yeah,
Thank
what a
you.
thrill. Yeah, thank you.
All right, well, if you would like more information about Fans for the Cure or for prostate cancer in general, check out their website at fansforthecure.org. Now let's go back to Kristen in the studio.
Judy, thank you so much, of course, for that important interview with the bell ringers on the floor of the stock exchange. And stay with us, everyone, because up next, we know Election Day is just 5 days away, and an election official is going to join me live in studio for everything that we need to know about voting and security. But before that, let's take a look at the NYSE's recent ad encouraging Americans to use their voice by voting on Tuesday.
Together, we achieve greatness.
A house divided against itself cannot stand.
Ask not what your country can do for you, ask what you can do for your country.
One small step for man, one giant leap for mankind.
Now, Matt, talk about the specialty services broadly and how Evernorth serves the specialty market.
Absolutely. Evernorth is a leader in the specialty space. A little bit of context. Specialty drugs are those that are used to treat patients with complex conditions like rheumatoid arthritis, MS, or even cancer. Very often these are infused or injectable medications. They'll typically have strict storage and handling requirements. We have some drugs in specialty that need to be infused into a patient 24/7. Even a lapse in treatment of just a few minutes can lead to serious medical consequences. The medications can also be quite costly. There are some specialty drugs that can cost hundreds of thousands or even millions of dollars per patient. And we expect demand for these specialty drugs to increase significantly over the next several years, and that's fueled by a wave of complex drug innovation. I'll give you one data point on that. Last year, over 70% of the drugs that were approved by the FDA were specialty drugs. Now, in the specialty space, we have several different ways at Evernorth that we serve the market. We have our leading specialty pharmacy, Accredo, where we treat over 1 million patients with over 7 million specialty prescriptions annually. We have our specialty distributor, CuraScript, where we serve over 12,000 healthcare providers. And then we have a collaboration with a company called CarePath RX that serves over 700 hospitals, health systems, and providers, and provides specialty pharmacy and infusion services on their behalf.
Now, Matt, we know that specialty drugs are expensive for both the healthcare system and for patients. What is Evernorth doing to increase access and affordability to these life-saving medications?
There's a lot that we do, and one example that I would highlight is our focus on the adoption of
Welcome back to NYSC TV Live, everyone. I'm Kristen Scholler here in studio. Well, Election Day is almost here, just about 5 days away, and it seems like people have already been voting in droves, whether that's mailing in their ballots or taking advantage of early polling places. So joining me now with more about what we need to know about this important election, different ways that you can cast your vote, and what might make it feel different than years in the past. I do want to bring in Kathleen McGrath. She's the Director of Public Information for the New York State Board of Elections. Kathleen, thank you so much for joining.
Thank you for having me.
The stock exchange, its parent company, Intercontinental Exchange, are very much encouraging people to get out there and vote. What do they need to know as we approach Election Day?
Well, this year in 2024, New York voters have more ways to cast their ballot than ever before. Not only are we in the midst of 9 days of early voting in person, and Election Day in-person voting is just next Tuesday, but we also have early mail ballots for the first time ever this year, as well as absentee ballots. So there's plenty of ways for New Yorkers to make their voice heard.
Of course, people need the right information. How do they avoid misinformation this election cycle?
We always encourage New York voters to go to the trusted sources for information, and that is the State Board of Elections and their local county boards of elections. Those are the folks that can give you the accurate information about the election process, procedures that happen before and after Election Day, and the ways to vote and important deadlines.
So let's talk about early voting. I'm planning to do that this weekend.
Excellent.
What are the steps to make sure that you get your vote out early if that's what works for you?
So early voting starts 10 days before Election Day and runs for 9 days. The hours and locations do vary by county. Outside of New York City, you can go to any poll site in your county. And you would want to contact your county board to get those hours and locations, but you can go at a time and day that's convenient for you. We're already seeing, we've had almost 1.7 million New York voters cast their votes just in the first 5 days of early voting, and then this still runs through Sunday, November 3rd.
What do people need to bring to the polling place to make sure that they can cast their ballot?
They need to bring themselves, maybe a little bit of patience, since there have been lines, since we are seeing kind of unprecedented turnout in terms of these early voting days.
Yes.
If they were not able to verify their ID during the registration process, they would bring their identification, and they're going to sign in at the poll books to verify and confirm their identity when they vote.
Okay, very good to know. Obviously, voting by mail is an option as well. What does that look like this election cycle?
So just starting this January 1st, all New Yorkers can request a mail ballot called an early mail ballot. Prior to that, we had absentee voting, where you needed one of a list of enumerated excuses of why you were physically unable to get to the polls. Starting in 2020, fear of COVID was one of those allowable excuses, but that expired at the end of 22. But starting this year, now any New Yorker can request an early mail ballot. It is too late to request one to be mailed to you, but you can still go in person to your local county board and request and receive one right over the counter there. The important thing with mail balloting is to make sure it's returned in a timely fashion. And that either means bringing it to the county board or a poll site in your county by Election Day, or to make sure it's postmarked by Election Day.
One of the reasons that I intend to vote early this weekend is because I would imagine that the lines might be long, that it might just be more challenging to make sure that my vote is cast in the right way on Election Day. Am I wrong?
While certainly having 10 days to vote, 9 early voting plus Election Day does disperse the crowd a bit, but we really are seeing high levels of turnout. This is only the second presidential election where we've had early voting, and the last one was in 2020, a lot of COVID-era restrictions. So it was really hard to predict the turnout. County boards do all they can to make sure no one's waiting more than 30 minutes in line, and they have the ability to reassess and add additional hours or poll sites if needed during that time. But maybe packing a little patience is good for you. And always remember, if you're in line by 9 p.m., you absolutely can cast your vote.
Okay, very good to know. And in terms of election security, that's a topic of conversation that has been making its way into the news cycle more and more. What would you tell our viewers?
Well, I would certainly assure your viewers that elections in New York State are absolutely safe and secure. They're run by bipartisan teams at the county and the state level. All sorts of any sort of voting technology has to be certified by the state board and runs through rigorous testing, both by independent labs as well as logic and accuracy, pre-election event testing, post-election auditing. So everything is run safe and securely and transparently.
I want to go back to what people need to know. Of course, weather is a factor for some people around the country, but I would assume that would not impact them, right? Any of these things that they're thinking about, trying to make sure that they have a plan in place to really get out and vote on Tuesday. What else do our viewers need to know?
I would assure viewers that we work with our federal, state, and local partners to be prepared for any unpredictable scenario that comes up. You have a road closed, you have a weather event, things like that, they do happen. And our goal is always the continuity of voting. So we're working with our federal, state, and local partners to make sure that goes on. Voters can rest assured that they can show up at their poll site. They can use our voter lookup tool on our website at elections.ny.gov to find out where they need to go to cast their vote.
Kathleen McGrath, thank you so much for joining me. Such great information, of course, as we encourage people to get out and vote. Kathleen's the Director of Public Information at the New York State Board of Elections. We appreciate it.
Thanks, Kristen.
All right, well, stay with us because up next, we will take one more look at the market as the month of October comes to a close, and we'll show you some very intricate gourds to celebrate this Halloween.
If I go back to 2021, it was really the first time in the company's history that we actually had an investor day where we showcased our first essentially 3-year strategy for the group. And it was very clear, very focused strategy. It was really about diversification, about the fact that we wanted to increase the franchise value of our reinsurance business, but we also wanted to get scale and expand on the insurance franchise. Once you have that roadmap and that vision and you have excellent people, it's amazing what you can accomplish. And I look at where we are now, 5 years later, basically. The company has more than doubled in size. Our stock has gone up over 60% over that period of time, better than the S&P. Our book value per share, which is a critical measure in insurance, is also up over 60%. And we have improved pretty much every facet of the company, from underwriting discipline to operating discipline. But one of the most important things we have done is we have created a culture of inclusion and collaboration. That's frankly what allows us to accomplish what I just discussed. One of the great things about insurance is that we have jobs for everybody, regardless of where you come from. But no, I did not think that insurance was going to be where I ended up. Mm-hmm. I had gone to the Johns Hopkins School of Advanced International Studies for my master's. I have a master's in international economics. I speak 3 languages, and I had a lot of experience in Latin America. So I thought there's got to be a multinational company out there that could use somebody with my talents. But I didn't know what industry, and I didn't care what industry at the time, to be perfectly honest. So I had applied to different companies. And the way I ended up in insurance is my older brother, who had worked for McKinsey & Company for a long time, had said, listen, AIG likes people with your background.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. We can take a quick check of the markets to see how we're faring. Stocks still near record highs and about on pace for October gains. Of course, that coming after what was about a 2% gain in the S&P in September, and stocks still continue to march on 2 years into this bull market. Well, we can't leave without having a little taste of Halloween. It's October 31st, after all. You may not think of Halloween as inspiring fine art, but Mark Evan and Chris Soria have a different view. These friends are behind Maniac Pumpkin Carvers, and they've definitely raised the bar when it comes to pumpkin carving. The two joined forces while students at the Parsons School of Design and combined their artistic skills with their passion for Halloween. What started as a passion project became a whole lot more. The Yonkers-based company here in New York now employs a team of artists, and during the month of October, they work about 20 hours a day. Impressive. Among their clients are the Yankees, Martha Stewart, and the Food Network, and their work has been displayed in the Museum of Modern Art, the Whitney Museum, and countless corporate clients. Well, Mark and Chris will have you looking at classic masterpieces in a whole new light. So let's take a look at some of their recent creations. First up, I hope we got this one ready. This, of course, is especially about a very special pumpkin. I think Mona Lisa. There we go. Thank you. I had to make sure we had that on par. So what could this say about the version of Medusa? We have a Medusa one as well. Thank you for rolling with us here. Okay, that's pretty cool. I have to admit, you can even celebrate with a World Series pumpkin. Let's get that queued up. Okay. We know who won the World Series. Dodgers took it home. Us New Yorkers, we are bummed about that, but that's okay. You can even put someone's face on a pumpkin. So if you want to master the art of pumpkin carving, be sure to sign up for a class on their website. Believe it or not, many Fortune 500 companies have used Maniac pumpkin carving classes for team building exercises. They might not rise to the occasion, of course, of these two artists, but they do sound like a lot of fun, and they make for very good decorations and conversation starters this holiday season. All right, everyone. Well, thank you for watching. As always, we'll be back here same time, same place tomorrow for that all-important jobs report. But just a reminder to our viewers, you might be watching us on Cheddar. You can watch us on Cheddar. You can also follow along at the NYSE's YouTube page at NYSE Official, and of course, download the NYSE TV app and go to tv.nysc.com. Thanks for watching.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.